Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day. Ira Epstein of Linn Associates with your agriculture update, and this is for Thursday, the 12th of July, 2018, and we're right now after 3 p.m. Central Daylight Time. A green day in the grain markets, and they turned into the green late, but they got their boost off of the fact that we were looking today at ending stocks, if you will, both for the old crop, new crop years, and the market that probably had the best news was cotton. You know, we've known there's so much damage. The market went down because the word was China had bought so much cotton, then maybe they weren't taking it. But right now what we're looking at, take it or not, there's not a lot of that stock. It's down much more than the trade thought. And that helped everything in this sector. It didn't hurt that the dollar at best is just stable. And the markets keep looking at the stock market, which doesn't back off. It's a tech-heavy move right now. From Microsoft down, all the big names, they're carrying the stock market at this point. Tomorrow we get the all-important financial release of a bunch of banks, and then I think it's JP Morgan on Monday. So 4 big ones tomorrow, and then JP Morgan comes out. So that'll impact how the financials are working, and you even had a little bit of a bounce in the metal. So all in all, after the big wipeout yesterday in commodities, a bounce day. It's not a trend day, it's a bounce day, except maybe for cotton. When you take a look at the weekly area chart, you're down 44 cents for the week in soybeans. When you look at where you're at on the lead contract, you're down to $8.30. I mean, this market's in the toilet. It has dropped now $2.25 from its top, in that neighborhood of a 22% drop. When you take a look at the November soybeans, you can see you made the lowest low of the whole move today, managed to close a little higher. 1 day higher doesn't change a trend. I think you realize that. And when you look at the swing lines, this is a chart without it. Let me come right back to it. This is a chart without it. This is it with it. Lower highs, lower lows. That's a bear pattern. To neutralize the pattern, because you've now got a lower low, you've got to take out 897 to do that. The problem is, if you look at key moving averages, they're now well underneath that 897. So wherever that comes in is where I would expect it on a good rally. By the way, that's a big rally. That's not good. That's big to get up to 885 when you're at 849. That's 36 cents. But a good rally, you would get probably resistance in that general area. Where did the market hold today? If you'll recall, I've been showing you that the market on the lower Bollinger Bands, this was Tuesday's action, fell down yesterday, didn't quite hit that lower Bollinger Band, hit 847 and a quarter. That number was 842 and a half. Today you went right to that number and spun away from it, got through the Bollinger Band by a penny. You don't have to exactly hit it. But when you do, one of my theories is that the pros that are short are going to cover the first time you hit a Bollinger Band. If they covered some of it there, that's okay. It depends what they did with the rest of their position. If they covered some of it there, it's okay. What did they do with the rest of their position? When you take a look at momentum, you are oversold. So you have a condition here where the market is oversold. It did not convert the oversold condition again to locking in a super bearish technical picture. That's all I care about on that. Oversold. Hit the lower Bollinger Band, downside target hit, bias down, trend down. When I look at the meal market, meal did not hit that Bollinger Band, and it may not. Again, it's oversold. You're in a zone. The market's got a pattern of lower highs, lower lows. Take out 331, and I think you have all kinds of warning signs at that point that, again, the market is broken out of the downtrend pattern of lower highs, lower lows. This market, and I mentioned it yesterday, from a technical perspective, has been acting better than the soybeans, which keep going down to new lows. You stopped that recently in the meal, and that's something I'm taking notice of. A market that is still weak and I think would lose if meal starts rallying is soybean oil. And the soybean oil still has the downtrend, went to the lower band, oversold. If you're doing the crush and you think, the word is think, that you're going to bottom in the meal, oil probably suffers from that. Rallies in this market might be met with good resistance around 29.50, but it is an oversold market. In the corn market, an important day, a key reversal day. Now let's talk about that. Yesterday you went down and closed under the lower Bollinger Band, momentum oversold. I think the first challenge is where you start getting people that are short covering each time. Second, the market goes down for a new low, reverses, takes out yesterday's high, and closes higher on the day, well over the lower Bollinger Band. Until today's low is taken out, I think a short-term trading bottom, maybe something bigger could be in place, but that's what I think. I think at a minimum, you're getting short covering that's stepping into the market right here. Resistance back up at 369, but this market, unlike the beans or the meal, is not trending. You have a higher high and a lower low. In the wheat market, you have a higher high, lower low. Yesterday, let's go back to it. Yesterday, you go down, hit the lower Bollinger Band, again in an oversold condition. If you rally, I'd look for resistance at the 18-day average, and I don't know what you do if you stay down. The market opened steady and put on a good-sized rally today. Wouldn't surprise me if it makes a run for the 18-day average, but between that number and a minimum of the 100-day is where I look for resistance to come into the market. In the sugar market, you see the difference here on the slow stochastic? Both numbers are under 20. They were under 20 yesterday, under 20 the day before, that's Tuesday, and Monday they were under 20. They were even under it on Friday. So once you have an embedded reading, embedded means you convert the momentum from being oversold to locking in a downtrend, and that takes several days in a row if it's staying under 20. I'm looking for each of the rallies to be met by what? Sellers. Then if the market starts getting to the lower Bollinger Band, this was yesterday's action, and a real embedded reading that's bearish, you can just ride that number, and we have to see if that's what this market wants to do. But right now, a super bearish case until you lose the embedded reading from a technical perspective. In the coffee market, we have a pattern of lower highs, lower lows. That is bearish. Resistance back at the 18-day average, 114.80. Momentum has flattened out right here. See how it was trying to point up and all of a sudden it's flattening out. The red number is still over the blue. If it gets under it tomorrow and prices are down, it probably means an extension of the market to the downside. A market that I've pointed out to you, and I think I've done it almost every day for 2 weeks, is that this market, cocoa, is stuck in a sideways action and it's coiling. Think of this as a pipe, the top black line and the bottom. They're called the Bollinger Bands. And the market is now wasting and building energy. Wasting energy in terms of trying to break out or down and going nowhere in the process. And building energy for an eventual move as that frustration sets in, the market one way or the other goes. Strong resistance, 25.51 to 66. Support back at 24.07. And the neutral numbers, the 18-day average of closes at 24.79. Now today, if you take a look at yesterday's action, you had in place a lower low and a higher high. If you took out 86.40, you could set up a position where the market makes a run for the upper Bollinger Band. The odds of that, not strong because you closed on the day's lows yesterday. If you look, you're at 84.54, 20 off the low. But it's what happened. The market opened steady, got that USDA report. It never looked back, and this is a limit-up close. I saw about 1,000 contracts bid and limit up, and I didn't see the more than the offers is what I'm saying. So we'll see what happens. Your upper Bollinger Band number is right literally there. You're over it for the first time up 87.86. You're going to look back at this and wonder, was that an important low? Because the 100-day average was not violated. When I look at the cattle market, where do you think yesterday? We talked about this. If the market broke further, the lower Bollinger Band for support, if it rallied, I'm pretty sure I would have said, expect to see resistance in the combination of the 105.60, 105.28 area. Now, one of the interesting things is one of the brokers in my office we have a trade platform, Market Center. Paul Hare has been saying, you know, he's been saying $5 breaks is about it in cattle off the highs, and you had about that. Pretty good size rally today, right back in, and going right to the spots that I as a technician would have talked about. So interesting play there. feeder cattle market, trying its best to stay over that 18-day average and not give you much play. I'd call this market, while it's got the swing line down, because it stayed over the 18-day average. Yesterday it wasn't. You closed at 149.40, just under that 18-day of 149.50. I'm going to give it a neutral reading for the moment. In the hog market, you're coming back from being under that lower Bollinger Band. As you can see, you had 2 days under it. You know what I teach. If you're new to these videos, Bollinger Bands, the theory of the algorithm is the market will trade within it 95% of the time. I came up with my own theory that each successive close under or over takes away one of those percentage points. Now, while the Bollinger Band number at 5% is going to be accurate over a bigger base, this one isn't the bigger base. You're looking to see, is the market getting ahead of itself? If it is, if one were short, maybe they're covering shorts looking to put them out at a higher number. It doesn't mean there's going to be a trend change. And that's pretty much what's going on as I see it right now. So when we put this together, some of it, another way that you come in is during the day, you look at points in the market. Now, it's a formula that we teach. It's very popular. It's been around for a long time. I certainly didn't develop it. I learned about it from other traders many, many years ago, and I watched how they worked with it, and before it became so popular, it was pretty fascinating to me. But you're going to get points like this. You're going to get a center point, and then a sell point, another sell point, a buy point, another buy point. Yes, there's an art with it, and we teach it in a 3-video package that we put together, and it's free, but it's a way to learn how to do this. And if you have charting software of any merit that's got technical studies, it will have pivot points in it. I've yet to see one that I don't consider good merit that doesn't have it. But what I did then is I tied momentum. You know, I'm a big believer in what goes on in the slow stochastics, so I tied that to it, and I give you a way to look at both the formula. I give you another video how to apply it on your charts, do it with the certain color so it's easy to see. And then what I tie is momentum to it, because momentum sometimes gives you a lead. Very, very important. How do you get access to it? It's simple. You're going to give us a call, 866-973-2077. You can go to our website at www.iraepstein.com. That's what the swing line would look with it, like with it, by the way. And if you go to our website, it's really simple. Click on any of our free offers. You'll see one of these come up with that. You can also click up here if you're watching me on YouTube. It'll take you right to those pages. I'm Ira. You have a great day, and I'll see you tomorrow.